ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you guys here on this April 6th, 2020. And, I'm going to tell you guys the biggest key thing to everything, the markets, everything right now. It's got to do with asymptomatic carriers of COVID-19. How many, for every person that's counted as having COVID-19 that actually manifests symptoms severe enough where they feel like they've got to go in and get tested, how many people out there are walking around, working and everything else that don't know they have it at all because it's only presenting itself as either a head cold or no symptoms at all. And then they get over it. And maybe they'll never even know they ever had it. So how many of those people are there for every one person that actually gets tested and gets on the list of the over 300,000 that's on the list now? I have to estimate this because there's no conclusive evidence out there, and this is my opinion only, and I'm estimating it. I would estimate it at somewhere around between 50 and 200 people. If it's 200 people that have it, that only present very mild symptoms, or maybe a little head cold, or no symptoms at all, then things are going to work out much better for us. If it's only 100 people that have it, things are going to be a bit worse for us. And if it's only 50 people that have it, things are going to be very bad, very bleak. That's why that's so important, and that's data we do not have at this point in time. So, moving on, if that's the case, if 200 people have it, that would mean 70 million Americans already have it. If there's 200 asymptomatic people for each one that's really counted. If it's 100, that would mean only half as many people in America have it right now, and we're in for a lot more pain. Let's hope it's like 500 people have it for every person that represents, And I would think that it's quite high, that number, that have it, that don't know they have it. And the reason why I'm saying that is because if we look at Spain and Italy, they're starting to crest in less new cases. They're not cresting because these countries are doing anything different. They're cresting because they're reaching herd immunity. And that would mean that this thing is far more progressed in the world than we could ever imagine. And that would mean the numbers are much higher of people that don't know they have the disease that actually have it. This disease moves out in front of itself very rapidly with asymptomatic. By the time you see one person that presents symptoms and goes in and gets tested, there's probably an army of people who actually have the disease and don't know they have it. That's how this disease moves. And going by those factors, things are going to get worse over the next few weeks, but this is going to be over an awful lot quicker than people could possibly imagine. And herd immunity will be attained, because this thing, I believe, is much more transmissible than they could ever imagine. Anyway, let's move on. Let's take a look at the markets today. Let's open up the charts right here, and let's take a look at what's going on. The first thing we're going to take a look at is gold. It's up today, $18.60. This is a very sound investment, but if you want to see an even sounder investment than gold, look no further than silver. So it's up today, 17 cents, $14.55 for silver. When the real rally begins, you're going to see silver moving back more to a historical ratio of the silver to gold ratio. That's when we know the real rally started. The real rally is coming because the Fed is going to be forced to print even more than they're printing now. Let's take a look at cryptocurrency. 201 billion. It's moving up. Bitcoin price is 71.56. It's looking good. It's looking strong. And cryptocurrency is doing rather well. I think it's going to continue to do well. I think it's going to rally with gold and silver. Let's take a look at the Dow Jones Industrial Average today. 21,879. It's up looks like 827 points, 3.93%. So we got a movement up in the Dow today. That must make the Fed feel better, but I think it's only temporary. I think we're going to see a movement down over the next week or two, down to 18,000, and then I think the Fed's going to come in with more stimulus, bigger stimulus packages to try to keep it up above 18,000. That's what I think is going to happen. And what's gonna happen, I think, is when this crisis starts to end, and I think it's going to end pretty soon, because I suspect that the virus is far more advanced than anybody could imagine. That's what I'm suspecting, because of the numbers I'm seeing coming out of Italy and how they're starting to crest now. Italy has a population of 60 million people. They're only reporting, 100 and something thousand cases. How can you have herd immunity if you're only reporting 100,000, 100 and something, or even 200,000 cases? How can you be starting to obtain herd immunity unless the virus is far more progressed than the numbers show? That's just simple logic, guys. And that would mean the virus is taking the same approach here in North America. Being as America's population is roughly 5 or 6 times what Italy's is, that means that our numbers are going to continue to increase, but they're going to crest. And not very far in the distant future either. This is actually good news. It means less people are going to die. That's simply what it means. The more people that have it in an asymptomatic way, then the lower the mortality rate is. The more progressed the disease is right now, it means the lower the mortality rate is, simply put. Let's move on. Let's take a look now at crude oil. 26.96 is down $1.38 on the day, or 4.87%. They're having a problem with crude, keeping the price of crude oil propped up. It's as simple as that, folks. Let's take a look at U.S. Treasuries. We're seeing a bounce or a rebound in Treasury yields. This means Treasuries are starting to fall a little bit. It's not insignificant, the yield, the increase in the yields. We're at 1.28 on the 30-year, and we're 0.65 on the 10-year. So Treasuries are starting to move a little bit now. The yields are moving up just a little bit. But, they're going to have to buy that entire yield curve, the Fed is, all the way up to the 30-year. They're going to have to buy Treasuries to keep these yields down. They're going to have to move into new forms of stimulus. They're going to have to come into very, very soon that they can't ever take away. So when the crisis starts to end, they're going to have to keep these stimulus measures in place that they're doing right now and more. And so what we're going to do is we're going to get a rather quick rebound of the economy. It's not going to be like we're going into a depression right now. And that depression is going to continue for the duration of the virus. But we're going to see a recovery when it's over, but things aren't going to be the same as they were before. So many businesses will be gone. So much of inventories on everything. Everything will be needed. People will be buying things because they need things, when the recovery is on, after this is over, after the virus is over. But there won't be things available. Companies will have went out of business and stuff, and there'll be a lack of inventory on almost everything you go to buy, including food and everything from your toilet paper to your undershorts. You're going to have to, so new manufacturers will come in. There's going to be a recovery from this on the other side of this, but what's not going to recover is your fiat currencies. Because they're going to have to keep stimulating them, and that's when the fiat currencies are really going to go down, is when the recovery comes. That's when your fiat currencies is really going to take a hit. Not right now. There's deflation out there right now, and it's what's propping up these fiat currencies. But once you remove that deflation, once the recovery comes and things start to pick up, that deflation will disappear like morning dew, when the sun burns it off. And when that comes, that's when we're going to really see a big rise in the price of gold and silver. Let's take a look now at the dollar index, 100.91. This is going to crash when that happens. Not the dollar index is going to crash, but the purchasing power of your dollar is what's going to crash. So if we take a look now at the optimism in the market, futures soar on optimism that worst of the virus pandemic is behind us. No, the worst is yet to come. Because even if we are at 200 people for every one person that actually has the virus and is counted, then that would mean that the virus is at 70 million Americans right now, and there's 330 million Americans. So that means that things are going to get worse before they get better. Okay, so listen, thank you guys for listening to this report. Stay tuned. Give me a thumbs up. Stay tuned for a couple more minutes. I got a little message for you guys, and then I'm going to go make my dinner. You guys have a great day, and we'll catch you guys later. Bye-bye. Hello, ladies and gentlemen. I have a sad announcement. This weekend, my father passed on at the nursing home. It was all rather sudden. Received a phone call, and he was having difficulty breathing. And then I received another phone call about an hour later, or 45 minutes later, and he had passed on. So, anyway, I want to thank all my viewers out there. And I know this is rather sad and it's rather sudden, you know. And I don't really know exactly what he died of. I know what I suspect, but I don't know for sure. Anyway, we hope everybody has, well, goodbye, people. And we'll catch you guys on the next show. Bye-bye.